we want to look at role of external auditors on integrity of corporate governance. And our guest this morning joins us, of course, from Rivers State. She is Mrs. Selin Okoroma-Vincent, ACIS Vice Chairman, Rivers State Chapter of ICSAN, Compliance and Governance Advisor, Paraclet Consulting, and ICSAN licensed firm of chartered secretaries and administrators based in Port Harcourt, Nigeria. Good morning, Mrs. Okoroma-Vincent.
Good morning, Mrs. Fumi. Good morning, listeners. I bring you greetings from the Treasure Base of Nigeria. I'm grateful to God and the Institute for the opportunity to share my thoughts on the issues we'll be discussing this morning. Thank you.
All right. Thank you so much for joining us. Also on the program this morning is Mr. Kaudi Ketefe, Head of Research, ICSAN. Good morning, Mr. Ketefe.
Good morning, Fumi. Good morning to you, our guests, and all our listeners.
All right, let's take this message. We'll be right back. All right, we're looking at role of external auditors in the context of corporate governance. All right, Mrs. Okoroma-Vincent, let's look at external auditors, who they are, their roles and functions. Let's look at that.
Okay, thank you, Mrs. Fumi. We can't really digress into the role and functions of external auditors without speaking about the principal marketing document of a company, which is the annual report and accounts of the company. Now, the annual report is a statement of the financial position and performance of a company in the year under review, and is actually the principal medium which directors of a company give an advice and account of their stewardship to the stakeholders of the company. Now, the information contained in this annual report and associated statement is usually relied upon by investors because it's used to determine the financial health and viability of the company. And because this annual report is heavily relied upon, it has become imperative, particularly for public companies, for this annual report to be audited and reviewed by independent external auditors. Now, the function of the independent external auditors as regards financial reporting is to assess the financial statements prepared by the board and ensure that the information provided therein is not just objective, is reliable, honest, and devoid of any fraudulent or misleading information, or probably any hidden information that isn't disclosed by the board. If we put it in context of a university environment, when you do your final year thesis and it's submitted, the university usually invites external examiners to review the thesis and ensure that the things that are supposed to be within the thesis have been complied with. So in the context of an organization, the external auditors have that supervisory function over the annual reports and statement published by board of directors of a company every year.
All right, so let's look at the link between external audit functions and risk management.
Okay, thank you so much, Fumi, for that very interesting question. Because there really is a link between risk management and the function of external auditors. Because if we try to explain what risk management is a process whereby organizations methodically understand, analyze, and address the risks attached to the business activities with the goal of maximizing the opportunities that arise and also taking leverage of the benefits while mitigating the crises that may arise within any given business activity. Now, if you'll agree with me that in today's business reality, the business environment is quite unpredictable, and companies have been forced to incur risk in order to sustain business continuity. If we look at the classical case during the pandemic, at a point, Apple, their Asian production had to take hold on their phone production to delve into healthcare and also producing materials for COVID prevention. That was very strategic in terms of ensuring that there's business continuity, but then they have to also weigh the risk and identify the opportunities and leverage on it to ensure that there is returns maximization for their stakeholders. Now, in terms of the board, it is the responsibility of the board to undertake this proper assessment of risk involved in every business activity. It's the board's responsibility to accurately weigh the risk versus the rewards that may arise in the business activity. the board is also required to set the limits, implement appropriate responses to every risk exposure. Now, this entire process of risk analysis can be documented and formulated in a risk governance framework for the company. Now, research has shown that majority of business catastrophic failures are often as a result of organizations not putting risk into proper perspective, or they manage risk improperly. Now, where the role of the external auditors comes into risk management and how it aligns into risk management is that the external auditors provide an independent assurance by objectively assessing the risk governance framework of the company and its business activities to certify whether the actions and processes and even the control systems put in place to manage risk, whether this particular process have really gone ahead to manage risk and enhance the value of the company, or these processes and actions put in place have devalued the risk framework of the organization. Now, these external auditors, they basically provide risk oversight functions to ensure that all the processes and the risk governance framework put in place were effective to ensure that the risk is mitigated and then it does not lead to a corporate failure. That's the relationship between external audit functions and risk management within an organization.
All right, great. Now, how would an external auditor ensure the integrity of the financial statement?
Okay, I'll just give a brief run-through for purpose of understanding of how their function really outplays within an organization. Now, after the board prepares the financial statements, it's the responsibility of the auditors to review the annual statements to ensure the integrity of the financial statements. And they do this by carrying out the function of investigating the company's control system, the structures that the organization have put in place, the accounting systems, the financial and business transaction. They do an analysis to look at the structure to ensure that what the organization has presented in its annual report is actually a true reflection of what the state of the organization is. Now, after this review is done, the external auditors come up with an expert opinion, which is usually presented in the form of a report. And this report is also included in the published annual report and accounts of the company. Now, this auditor's report has two main purposes. One of it is to give an expert and independent opinion on whether the financial statements gives a true and fair view of the financial position of the company. Now, the second purpose of this auditor's report is to give an expert and independent opinion on whether the financial statements actually comply with relevant laws and accounting standards. Now, this external auditor's professional opinion sort of gives a reassurance to people who rely on this published statements that the information in the financial statements are true and reliable, and that at each instance, this information are things that actually provide a real picture of the company's financial position. And I must also guide listeners. It's not at every point in time when the external auditors may give a positive review. There are times where possibly, because of the investigation, there may be things that the organization has not projected in the published report. So there may be also dissenting opinions as regards the position of the organization in the auditor's reports.
All right, let's quickly look at the provision of the code that recommends appointment, reappointment, or removal of external auditor be made by committee responsible for audit to the board. Why is this provision important in the governance context?
Okay, thank you. This is a very excellent question. As a matter of fact, the relevant provision of that prescription is in the Code of Corporate Governance under Principle 20. And it provides that the appointment, removal, and reappointment of external auditors should be made by the audit committee, which is the committee responsible for audit purposes within the board. Now, the audit committee is one of the operating committees within the board, because when you have a board of directors, there are several functions that the board executes. So for the purpose of ensuring that all the functions, there aren't lapses, committees are set up within the board. Now, one of such operational committees within the board is the audit committee. And the audit committee is saddled with the responsibility of financial reporting and disclosure. The audit committee is also responsible for oversight functions as regards audits. Now, in its relevance in corporate governance is that the corporate governance code prescribes that members of this audit committee should not just be financially literate, but they should also have relevant understanding of accounting standards and financial management, because that's the only way they can actually do oversight function as regard audits. Now, the other...
Thank you so much, Mrs. Celine Okoroma-Vincent, ACIS Vice Chairman, Rivers State Chapter ICSAN, Compliance and Governance Advisor, Paraclet Consulting, an ICSAN licensed firm of chartered secretaries and administrators based in Port Harcourt, Nigeria. Thank you for joining us on the program this morning.
Thank you.
All right, Mr.